Headlines. Kathy Entwistle is with us, Morgan Stanley Managing Director, Private Wealth Advisor, and Samantha Azzarello, JP Morgan Asset Management Global Market Strategist, joins us on the phone. Welcome to both of you. Kathy, let me begin with you. Did you hear anything of those headlines that really surprised you? Slowing in some areas, some pessimism, generally better than the prior quarter. A lot of what we expected, isn't it?
Absolutely. Nothing that we just heard surprises me at all, and I don't think it is going to surprise the market too much either. We have heard from the Fed over the last, 6+ months that we're having a lot of trouble in the economy. They're doing a lot to try to support it and prop it up, and also keeping interest rates low for the next probably 2 years is another way that they're doing this, and we should see no expectation of changes, until the economy starts to show improvement.
Samantha, go ahead. Finish your thought there, Kathy. I'm sorry.
No, it just might be a while. There's a lot of things going on with, digital transformation companies are doing quite well, but those that have not pivoted and, modified their business models to react to what's going on with the pandemic will not do well. And we will see more discouraging news coming if things don't change.
It's really true. I've heard people say it in the past. Every company must be a digital company one way or another, and these past few months have certainly borne that out. Samantha, let me turn to you because you make an interesting point, and you say, among other things, from here, let's expect the markets to continue to grind higher, but the risks to the market are not balanced, however, with more risk to the downside. Unpack that thought and what it means in practice.
So I think if you just go back to March, right, and the way the market dropped then, the volatility we experienced then, it was the market being too pessimistic, right, about the state of the world because we lost guidance, we didn't know where we were headed, we didn't know when we would turn the economy back on. So risks almost skewed a little bit more, I would say, to the upside. Now, you fast forward, we priced in a lot of gains, we priced in a lot of progress, and I agree with Kathy completely. Right? There's a lot more that we don't know, right, how this all kind of plays out. And if this recovery is going to happen in fits and starts, well, guess what? The equity market's already priced in kind of a perfect, going back to the letters, but almost a perfect U-shaped recovery. And I think we've realized there's no letters. This is going to be very messy. And whether it's hiring or turning the economy back on, it's going to be in fits and starts. And I just think the market's a little bit too optimistic. That being said, Fed support, and if we get more fiscal support, that'll allow the market to grind higher slowly.